The US stock market just reacted to Nvidia in a way most investors didn't expect, and that reaction is creating a ripple effect across the entire tech sector. Nvidia's latest move, paired with the market's growing sensitivity to Federal Reserve signals, is setting the stage for a potentially volatile week. If you follow tech stocks or rely on them for portfolio growth, what happened today matters more than it may seem on the surface. Stay with me, because by the end of this video, you'll understand how Nvidia's shift connects directly to the broader market and what it means for your investing decisions in the coming days. Before we dive deeper, make sure you subscribe to Wall Street Market Brief for clear daily updates that help you stay ahead of major market events. Now let's break down what's really happening behind the scenes. Nvidia's performance this week caught analysts off guard. The company delivered stronger revenue growth than expected, showing that AI demand is not just stable but still expanding aggressively. That part didn't surprise the market. What did surprise investors was the reaction across other major tech names. Normally, when Nvidia beats expectations, the entire tech sector rallies along with it, but this time the response was mixed. Some companies gained, others stayed flat, and a few even slipped. This tells us that the market is starting to separate AI-driven performance from the rest of the tech industry, which isn't something we've seen consistently until now. This split reaction is important because Nvidia has become the unofficial indicator for the health of the entire AI sector. When Nvidia rises, it often pulls companies like AMD, Microsoft, and even certain software names higher. But the fact that only a few companies followed Nvidia this time suggests the market is becoming more cautious. Investors are still confident in AI, but they are no longer assuming every company tied to the theme will rise equally. This signals a more selective environment, where only companies with real earnings strength will gain momentum. At the same time, the bond market reacted quickly to Nvidia's results. Treasury yields dipped slightly, a move that indicates investors expect higher earnings from tech but still remain sensitive to the Federal Reserve's next steps. This combination creates a unique tension in the market. On one side, Nvidia is signaling strength in a critical growth sector. On the other side, investors know that if interest rates remain elevated for longer, even strong earnings might not be enough to keep tech valuations rising at the same pace. Institutional traders also made a noticeable shift today. Options volume on Nvidia and other mega-cap tech stocks increased significantly, but volatility pricing stayed elevated. This means professionals expect bigger intraday price swings over the next few days. The market isn't predicting a crash or a rally. Instead, it's preparing for a wider range of possible outcomes, which usually happens when both economic uncertainty and earnings-driven momentum collide. There's another layer here that many investors are missing. Nvidia's results did more than move tech stocks. They also influenced how traders are thinking about the broader market. When one company dominates a sector the way Nvidia does, its performance shapes sentiment for the entire S&P 500. And if tech loses momentum, even temporarily, the rest of the market may struggle to gain traction. The current market still relies heavily on a handful of tech giants for upward movement. Any hesitation in those names can create hesitation throughout the index. Meanwhile, smaller companies reacted differently. Unlike large tech names, small-cap stocks saw a modest rise. This pattern often appears when investors think the Federal Reserve may soften its tone or become more supportive of future economic growth. Small caps rely heavily on borrowing and credit, so they tend to rise when traders anticipate lower rates or more favorable financial conditions. This early move in small caps may be a sign that not all investors believe tech will lead the next market rally. Some are positioning for a broader rotation. The biggest question now is whether Nvidia's strength can push the market higher on its own. Historically, Nvidia has led major tech rallies, but it cannot sustain the entire sector without support from other giants. For a meaningful rally to form, companies like Apple, Amazon, Microsoft, and Alphabet need to show consistent movement. If they do not, Nvidia's performance may still be strong, but the broader market could remain stuck in a narrow trading range. Earnings season is also adding pressure. Companies across different industries have reported mixed results. Retailers are warning about slower consumer spending. Energy companies are facing unpredictable commodity prices. Banks are dealing with rising credit stress. These mixed signals make it harder for investors to form a clear outlook, which increases the market's dependence on tech for direction. All of this brings us back to the Federal Reserve. No matter how strong Nvidia's results are, the Fed's next message has the potential to override market momentum. If the Fed signals that inflation progress is slowing or that financial conditions need to stay tight longer than expected, tech stocks could face resistance. But if the Fed acknowledges cooling inflation and hints at support for future economic growth, tech could regain strong momentum before the week ends. This is why the market's reaction today matters so much. Nvidia delivered strong results, yet investors remain cautious. Some sectors showed strength, while others stayed flat. Volatility stayed high, and the bond market sent conflicting signals. When market pieces move in different directions at the same time, a larger shift is usually approaching. If you want to stay ahead of that shift with clear and simple daily analysis, make sure you subscribe to Wall Street Market Brief. And if you want a video explaining how Nvidia's performance could reshape the AI sector over the next 3 months, just tell me in the comments. For now, keep watching tech behavior closely. Observe how the market reacts to yields, and pay attention to any early rotation into new sectors. Nvidia may have delivered the news, but the market will decide the outcome in the days ahead.